What's up, Swing Trader? Snacks here. We're going to jump in and do our watch list for Wednesday, October 29th. And as always, we'll jump in and start with a bit of market breadth. Another update on the SPY coming out of range and going on a ripper. Guys, this is extended. I'll start there with that. In a nutshell, we've got some slightly negative divergence or negative breadth here across our different indices. So we've got RSP actually rolling over back into range, possibly. I would not hate it bouncing off of the top of the range and pushing back up. But the fact that this is rolling over while the SPY does this, okay, is a negative divergence. And it signals just a bit of caution. It also signals that the Mag 7 is really what is pulling the market currently, okay? And then tech, we are still ripping, but let's check out QQQE and see if we've got the same look there. Yeah, this looks a little bit better. Tech is leading, semiconductors specifically. And then we'll take a look here at IWM, same signal here, all right? We're rolling back towards range, okay? We'd love to see a bounce off of top of range and a push back up towards highs. That would signal strength, okay? But right now, this is a negative divergence, and we need to be cautious. Of course, guys, you should not be buying a multi-day ripper into all-time highs. You should not be positioning yesterday, very likely today. We need to wait on a pullback, okay, and then let our entire focus list set back up. Entry day was Friday, okay? Last Monday was the first signal, and then Friday was confirmation, and that was your entry. Let's look at market internals, see if they're signaling anything to us, and I will tell you that yesterday they signaled obvious caution. So you've got Friday's price action here. This is the up-down volume with the zero line. So Friday, Monday, Tuesday, and obviously yesterday, most of it was sell-side volume. And then you've got your advanced decline line, okay? And you want to be, again, over the zero line, showing that most stocks are advancing as opposed to declining. Gapped up, sold off, gapped up, sold off. All okay, still above the zero line, but showing a bit of caution, especially Monday there, right? Showing, hey, the steamroller is slowing down just a little bit. And then yesterday, obvious caution. And the tick did go negative yesterday, at most of the day yesterday as well. So absolutely getting that caution signal there out of internals. And let's jump over here and look at some additional breadth. And we've got our stocks over the 50 and 200. I've got a couple lines in here that I want you to align with the SPY down below. Look at how the crosshair is showing on both. And if you can see this negative divergence, as we were going up, we began to go downward in the stocks over their 50 and 200. That's a negative divergence. And you could say it was the marker of a bear market. And we also had that here in early 2025. And you could say possibly this is beginning to happen. But what I want you to notice is other times that it has happened. It's why I didn't put the line in here. I would say this is a little bit similar right here to what's happening now, right? And you can see it turns around at times, right? And sends us on to a multi-year run. So look, we can't be too predictive or say this is the top, but we do want to keep an eye on this and make sure that we do sort of bounce off of the 50 line and begin to curl back up, or at least at the very least begin going sideways. If this does continue to decline as the SPY continues to push higher, that would be a negative divergence, okay? And then we've got our high-low index here, stocks making new highs versus new lows. We just want to stay above the zero line. Any stays below, we want to quickly get back above, as we've been doing for a while here. And you can see when we rolled into a nasty part of the market, again, look at the crosshair, okay? You can see what a nasty time in the market looks like. All right, so we are looking fine. We just want to be sure that we're keeping an eye on these charts and continue to monitor breadth. It is very important. But guys, look, we need to wait for the next macro pullback to set up our focus list of 50 of the leaders that we've got here. I'll try to remember to put that in the description below so you can have that list. But to map out a couple scenarios here, one, we just keep pushing. It at some point maybe begin to go sideways, but I think more likely is a scenario where we pull back a little bit, let our moving averages catch up, and then when we re-trigger, we're right back onto trend, and we should have some of our focus list firing off on triple Rs. I would prefer to see that scenario. I would love to see this thing pull back a little bit, close a gap or two, and bounce off of that prior all-time high level, and we would want to buy that move, okay? Just below highs, we would want to be buying our leaders in that move. So that would be a fantastic opportunity. It is the next one that I am looking for. I do believe it will happen at some point. Of course, we're going to pull back, okay? And it would be healthy at this point. So do not be surprised if we do so, and do not be over positioning. Again, we do have some mixed signals throughout the markets. Look, guys, taking a position here is not a favorable trade, right? You need to wait for the next macro pullback. You need to wait for things to pull back and show a sign of strength that they are going to resume trend. make a higher low, and then begin to push back up, remounting the short term. The 9 EMA is what I like to use, but remounting the short term moving average would suggest we are going to continue the trend higher. As you wait for that, what can you do? You can plan, okay? Plan your next trades. Mark some of the leaders that you're ready, that you would like to focus on. So myself, I had NVIDIA ready on Friday. When the good reaction to the report on Friday came out, the only stock that I was watching, I went live for Bootcamp, the only thing I watched was NVIDIA, and we entered, and that worked out quite well. And I know one of you jumped into that with me and already doubled your investment in Bootcamp. That's a pretty fantastic way to start, isn't it? So good for you, man. I'm happy to see that. But there is a bit of value that I think I would like to share here today. Again, plan, study, get ready for the next pullback, and be ready for the trigger on the next set of triple R's is what I would suggest you do, and pump the brakes. Okay, we've got negative and bearish divergences all over the place out there, suggesting high likelihood of a pullback. Going long into this move is just not a sustainable strategy. Okay, you need to wait for the pullback. But look, guys, there's just not much to do. I will say, if I'm looking for anything, I've got my eye here on precious metals. So you're getting our retracement reaction, a remount of the 9, and UUUU and MP are both slightly attractive to me here. All right, I would want MP back over the 50, I believe at this point. Yeah, so I would need this over the 50, but my eye is on this sector for a bounce, okay? If we have money flooding out of tech just a little bit as we're kind of running away, right? I like this. So I like MP, I like UUUU, and the sector of precious metals possibly getting a bid here this week. I've got my eyes on it, and then the other would be quantum. I know, I get it, quantum. They don't make any money. I understand the bear case, but look, I have to say, you're on the wrong side of the trade, okay? The market is putting a premium on the speculation of this breakthrough revolutionary technology, okay? And you're wrong right now. If you're shorting these stocks, you are wrong. Since, people have been short since the initial rip, and you're on the wrong side of the trade. Stop trying to outsmart the market. You're getting smoked. You're not smarter than the market by shorting these things right now because you are convinced that they shouldn't be this high because of XYZ. You are clearly on the wrong side of the trade. This thing hasn't broken structure since the original move. Okay, it has not put in a lower low, lower high since the original move. I mean macro, like not week to week, day to day. Like, dude, this is in an uptrend. Okay, and it's ripping. It popped, went sideways, and ripped. Like, you're on the wrong side of this trade. It's just that simple, and it looks like it might squeeze again. All right, NVIDIA had a big time presser yesterday where they talked a lot about quantum. I would not be surprised to see this stuff rip again, but I would want it to clear range, right? So getting through about that level there would have me interested in a short-term play in a strong sector in a trend. I can't say backed by growing fundamentals because they do not have that, right? But look, we are trending and we are respecting structure, and there's obvious Wall Street participation. A lot of people are trying everything they can to short this. You could say maybe we made a lower high, but we have not made a lower low yet, okay? This would need to push down through here, okay? And then you could say that we're in a downtrend, and I understand the short theory. I understand the short theory because they don't make any money, right? But you need to wait. Okay, you don't have confirmation, and pretending to outsmart the market while you get smoked is just ridiculous. All these people posting all this due diligence, we know they don't make money, okay? But the market is putting a premium on the future technology. It's that simple, okay? And right now, they're ripping, and you're on the wrong side of the trade. You're sitting here getting smoked for 2 years instead of making some damn money. Come on, I don't understand the perma-bear stuff. Use your eyes, okay? This is running. This is ripping. Wait for it to break down. It hasn't done it yet. Has it put in the first leg? Yeah. Okay. Maybe the second. It's got to do the third. Okay. But if this rips up through this zone here and invalidates that, we might test highs. Okay. And that's plenty of room to rip off another triple R on these guys. So that and UUUU, MP, the entire, I would say RGTI is my favorite. So RGTI and UUUU are what I'm looking at as possible entries today, but I'm absolutely not going to force it. Okay, and the other thing, speaking of that presser with Jensen Huang. They had his keynote for NVIDIA yesterday, speaking of the future. He mentioned Nokia and their plans to, look, man, I'm not going to try to explain this stuff. I am not a big tech head. I am an opportunities guy, and I see an opportunity here for Nokia to put in a change of character, which it has done, right? But I think we might get some legs to this move. So I'm going to get this in my long-term account. I'm just going to buy it at the open today. I don't care what it's at. I'm just going to buy a chunk. And then what I do with those sort of positions that I plan to hold for 3, 5, 10 plus years is I listen to every earnings call and I decide, would I like to add more? Or are they in a phase where maybe I need to be scaling back? I just listen, I pay attention, but I'm going to get a starter here in Nokia. I encourage you to go just YouTube, Nokia, NVIDIA, okay, and watch what they talked about yesterday. Very interesting stuff. But guys, a narrative play I've been looking at for a couple of weeks now, and I continue to be interested in, and I am planning some trades on this, but I want to be clear. I'm waiting for the next macro correction, not pullback. I mean full-on correction, bear market type kind of thing, right? 20+% off of all-time highs. And if it's a waterfall, great. I'd love for it to happen fast and not be a slow bleed, okay? But period, what I am saying is that I am waiting for the next major market correction, and I want to have a list of companies that are streamlining their businesses through layoffs with AI, okay? And I want to buy a handful of those for the next 3 to 5 years, okay? That will be my narrative play when the market sells off. And I want to encourage some of you guys in Bootcamp to look at this. I understand it sucks, people are losing their jobs. I get it, okay? But this is a Shark Tank and we don't bring our feelings to the market. It's happening, and the point is these companies are going to increase their margins, okay? They're going to improve their margins and likely increase productivity and their revenue. These companies are going to get bigger and more efficient. In the next significant correction, they're going to be on sale, especially as those numbers trickle in, as they implement AI and streamline their business. Fire people. It is what it is. That's what, we're going to see a lot of. UPS just announced 40,000, I believe it was. Amazon, 30,000. Target, 1,800 corporate level jobs. It's happening all over the place. So I encourage you to look for a streamlined narrative play as one of our big ideas going forward. Again, this is something we're not going to be entering 6 to 12 months, okay? But I want to go in with size when the opportunity does come. So, you need to be doing your DD now. You need to be finding companies that are growing now, okay, and that are poised or telling you already that they're laying off. Okay, JP Morgan is a big one I'm looking at. Goldman Sachs, they have massive overhead, okay, and they're going to be cutting cost. Their largest cost is payroll, and they're going to be slashing it. Some estimates are 80+% for JP Morgan. That's all going to go into the bottom line. They're going to become far more profitable, okay, and their efficiency is likely to go up as well. This is a massive trade. Okay, we're going to make a lot of money off of this trade if we're patient and we pick the right companies. All right, so I encourage you to start to look into that. Another one I'm looking at is Allstate. I like the idea of streamlining, not needing so many insurance agents, right? I think Allstate is going to end up cutting quite a bit, and they're a very profitable company as it is. I'm looking at Allstate. I'm looking at JP Morgan. I'm looking at Goldman Sachs. I'm already in UPS, which is fantastic, actually. I got into UPS. I felt that they were near bottoming. I love that they had a 7% dividend, and it just felt, the price appreciation, if they were to be bottoming, the largest freight carrier in the world, just getting absolutely tanked for a few years. I had a feeling they were going to figure things out. We would see some price appreciation alone, plus that 7% dividend, and I actually happened to nearly bottom ticket. Wow, fantastic. Fantastic. So guys, I just want to say that you need to be looking for streamlined narrative play. Put that on your radar. Find expanding companies with large overhead who have already told you, or try to think ahead, who are very likely to start cutting corporate and management level jobs, big payrolls. And then not just that, think about Amazon. Warehouse. They're going to be cutting corporate and warehouse. They are going to lower their cost of doing business, and they are very likely going to improve their margins. It's not likely, it's happening. It's going to happen. They're going to become more profitable companies. Wall Street likes that. All right. So, guys, as I said, very big trade on the radar there. But you need to chill out. You need to wait. You need to be patient. We can do the triple R the next time the market pulls back, okay? The next time we get a retracement in the market that goes back onto trend, a lot of our focus list is going to trigger. We're going to make money. All right, we got to be patient. We just made over 70% with this trade here on Hood. And we just made over 85% on this trade here on NVIDIA. Guys, we're going to do that in the next week or two. We're going to rip some more bangers off. But in the meantime, do be planning. If you're struggling in these markets, come join me in Bootcamp. Like, come on, man. People are making double their investment literally first week of being there. Like, dude, I will teach you to outperform the market. I have 6 continuation models, all of which hit at over 50%, most over 70, at a minimum of 2R. Money printers, okay? And then I teach you how to read market breadth and when to deploy them. Right now is not the time. We're going to wait. Last Friday was the time we made money. Guys, stay safe, manage your risk. Let's go make some money. I'll see you soon.